to be great. Before you proceed with this video, please note that the content provided is for educational purposes only. This video is intended to inform and educate viewers about forex trading, including assets such as technical and fundamental analysis, trading, investing. That's a typing fault. There's a type of traders and trading instruments. It is not under any circumstances to be considered to be financial advice. The purpose of this video is solely to enhance your understanding of these concepts. Please remember that trading and investing carries risk, and it is important to conduct your own research and consult with a financial advisor before making any financial decisions. Okay? King here, AZ, the King of Kings. It's been a minute. Guys. It's been a minute. I hope everyone is having fun so far in 2025. I hope 2024 was not as brutal as most people say it was. I hope there were exciting times. So yeah, leaving that to 2024, now we are in 2025. We are focusing on the future. We want to know what 2025 holds for us. So we have to be happy every time when we have an opportunity to get to see tomorrow. Yes, with all that said, so you remember I released a video introducing you to all the forex basics. So today's video is going to focus on price movement or technical analysis. You can say so. What we'll be focusing on today is its price movement, as I've mentioned. Without wasting time, let's get into it. What is price movement? So price movement refers to the changes in the asset's value over time on the chart. You must be asking yourself, why does this matter, Easy? Why are you telling me this? It's the core concept of all trading activities. Traders aim to profit by predicting these changes, whether prices will rise or will fall. Okay, so imagine now, let me give you if a few people want to buy and then sell, price go up. If more people want to sell than buy, prices go down. Price movement is essentially the market's reaction to imbalances in supply and demand. Imagine a new iPhone released and the demand surges while supply is limited. The price of the iPhone rises as people compete to buy it. A similar concept applies to the financial markets. That was an example, I hope. And when I mentioned the supply and demand, I was trying to show you the key drivers to price movement. What drives the market? It's supply and demand. Okay, moving further, the types of price movement. Yes, we need to know what are the types of price movement we have. We have the uptrend, also known as the bullish, also known as the peak. So the market makes higher highs, which are peaks, as I've said, and higher lows, which are dips. This pattern shows that buyers are dominating the market. For example, a stock starts at $50, rises to $60, then dips to $55 and rise again to $70. Each high is a new high, or let's say it's higher than the previous high, confirming that there is an uptrend. I hope that was clear. And then we have the downtrend. The market makes lower highs and lower lows. This indicates that sellers are in control. For example, a currency pair drops from 1.20 to 1.18, rises to 1.19, then falls again to 1.17. Each new low is lower than the previous low, signaling that there is a downtrend, prices are going down. And then we have a range bound or sideways market or a consolidation or constant prices. Um, Oh, sorry, there was a hiccup. As I was saying, the ranging bound or sideways movement or consolidation, the price oscillates between the specific high and low without forming a clear trend, often seen during market consolidation or periods of low volatility. For example, a stock fluctuates between $100 and $110 for several days. Now that is a consolidation. However, I will show you on the charts so that you can get a clear picture of what I am talking about here. So yeah, now I will be showing you on the charts so that you can see what I'm talking about when you look at the charts. So So as I've said, we have the uptrend where the market is making higher highs and it is making higher lows, or you can say peaks or dips, as I've showed in the slide. Uh, and this movement, as I've said, it shows us that there are more buyers in the market. Let's see here. The stock course is the stock on the first on the dot that's blue there was $50 and it rise to $60 and it dipped to 55, went to 70, dipped to so on 65. You see what I'm going with. So now this shows us when you're looking at your charts that uh, prices are bullish because here's a higher high, here's a higher low, here's another higher high, higher low, higher high, and higher low. So for me to before taking any trade, I like to confirm things. I like to confirm whether I'm seeing them so that I can take trades with confidence. Okay. Let's say I'm seeing this on a daily time frame. This is what I would do so that I can confirm indeed the direction is bullish, and you can see indeed the price is bullish. Okay, so this is the up trend, and now we are going to the downtrend. And as I said in the slide there, that it is when we have lower highs as well as lower lows, which indicates that there are more sellers in the market than there are buyers. So here's a this is what you would be seeing on the chart. This is what you will be seeing in the chart. This is a you see this is a lower low, this is a lower high, this is a lower low, lower high, lower low, lower high, lower low, lower high, lower low. Okay, now this means that prices are going down, meaning there are more sellers in the market. And as I've said, for me to I like when it comes to me, I like to confirm that indeed what I'm seeing is what I'm seeing so that I can take trades with confidence, knowing exactly what's uh, what's happening in the market. Okay, so yeah, this to me confirms that prices are bearish, as can see that prices were 1.2, and they decreased to 1.18, and they rose again to 1.19, to fall again to 1.17, only to do that going on. So keep dipping, as I said. So yeah, this is a downtrend. And then we have the side the side by side or ranging or sideways movement or consolidation. It has many names. People call it many things, just like the downtrend has many names, as well as the uptrend has many names. So here, and as I've said, prices are playing in the same zones. They're consolidating. There is no strong buyer. There is no strong seller. Prices are just going sideways. This is what you'll be seeing on your chart when prices are going sideways. You see, this is as low as prices go, and this is high as prices go, meaning there is no dominant buyer, there is no dominant seller. So in order for me to confirm that prices are indeed going sideways, I'll put a support, and I'll put a resistance. Now this confirms to me that prices are playing in the same zone. Let's say here prices were $100. I mean $110, and they decreased to $100, $110, $110. Prices, if they keep playing around those odds, then we have a consolidation. So yeah, I think that's a wrap for the charts. Okay, everyone, that was the types of price movements. I hope everyone got to understand more about them. So now we are going to focus on what drives price movements. Okay, guys, now we are going to focus on that. So economic news and events drive uh, the markets. Major economic announcements like interest rate changes, inflation reports, or employment data can trigger significant price movement. Say, for example, a central bank raises interest, often to strengthen the country's currency because higher rates attract investors seeking better returns. Okay, that's another thing that's driving. Uh, there's also another thing that I think you are aware of, drives the markets is traders. You know, it's the market sentiment. Okay, traders' emotions, the fear and the greed heavily influence short-term price movement. Say, for example, during a global crisis, fear may cause massive sales during prices. Driving prices down. For instance, we know what's happening in the United States right now. Well, most of LA burnt down. For those who are not aware, LA burnt down. The real estate is going to be affected. However, the insurance companies they will be migged out by those who had insurance for their houses. So let's say there are businesses in LA that have burnt down, and as soon as the fire started, maybe most of the investors closed their trades or whatever, pulled out their investments because they saw that uh, the fire is going to affect the business and that they decided to withdraw. So those sort of things. And also there are technical indicators that also drives markets. They are used by many traders, institutional and some retail traders, if I'm not mistaken. I think I know a few who use indicators. So tools like moving averages, relevant strength index, the Bollinger Bands provide insight into trends, momentum, and potential reversals. For example, if the relevant strength in index indicates that a stock is overbought, it will signal a potential drop in the price. Okay, as we also have fundamental factors that drive price movement. Long-term elements like a country's economic performance, political stability, trade policies impact price movement. Say, for example, a country with a strong gross domestic product growth and low unemployment often sees a stronger currency. It's often seen as a stronger currency. I'm sure I didn't miss you guys there. So if anything you didn't hear, please leave a comment, like, subscribe, and I will gladly reply to comments because we are in this together, my brothers and sisters. We are in this together. So now I'm going to tell you, let's move the tools to analyze price movements. Uh, I will also, when I'm done with this slides, I will also be showing you on the charts what I am talking about so that you can get a clear image of what I'm trying to say or trying to inform you about. So we have the candlesticks. So the candlestick patterns are a visual tools representing price movement for a specific period. Common patterns are the doji, which indicates indecision in the market. Prices may move strongly either direction. We have the hammer, which signals a reversal to the upside after a downtrend. And then we have an engulfing stick, which is when there is a larger candlestick that fully engulfs the previous one, showing strong momentum. Another tool that we can use is the support and resistance levels. The support is a price level where demand is strong enough to prevent further decline, and resistance is a price level where selling pressure is strong enough to halt upward movement. If a stock repeatedly bounces back from 100, that indicates there is a strong support at that level. Okay, and we also have chart patterns. Also have chart patterns. So chart patterns are geometric formations on a chart that suggest future price movement, such as your head and shoulders that predicts a reversal from an uptrend to a downtrend, and flags and pennants that indicate continuation. Oh, sorry for that, continuation of the current trend. So yes, and then I am going to show you right now what I am talking about, as I've said, so that you can get the clear image of what I'm trying to say or trying to teach you. So yes, we are now going to focus on the tools to help us analyze the price movement. So it's like as I've said on the slides, we're mastering the basics. So there are candlesticks patterns that you can look out for because they are a representation, they are a visual representation of the price movement. As I've said, there are common patterns such as the doji, So these are the doji candlesticks, and as I've said, they indicate the indecision in the market. So prices may go strong either way. You know. So yes, this is a doji. You can see this is the bullish doji, the bearish doji, the long black doji, the gravestone doji, and the dragonfly doji. So now this is what you would see. Certain patterns like this will inform you of how the price um, is heading. Okay, and we also have, as I've mentioned, the hammers. They usually signal they usually signal a reversal. Yeah, these are the dodges you would typically see, as well as the inverted ones. Those ones, these are the hammers, and as I've said, we also have the engulfing patterns where larger candles engulf the previous pattern, such as this one here. As you see, this is an engulfing, a bullish engulfing um, pattern here, because you see that the bearish candlestick is much lower than the or shorter than the bullish one, and the bullish one is much longer than the bearish one. So this is an engulfing, this is a bullish engulfing, and this is a bearish engulfing. As you can see, uh, the bullish candlestick is much shorter, and the bearish candlestick is much longer. So yes, and then and now we move to the support, and the support as well as resistance. So as I've said, oh, let me remove this so I can show to you. Okay, hang. So let's say prices are moving this way. Yes. So as you can see, this will be my support level, just because here prices they they bounce back every time they reach the zone, meaning prices are failing to break out from these levels to go back to where prices were, as you can see. And then now I will show you what is a resistance. um Let me just clone this one. Yes. So, oh, sorry. So now this will be a resistance, this one. It will be a resistance. Let me just write it down. And this will be our support. This will be our support. So now you see prices failed. They bounced here and went back, and they bounced back, and they went up again. Sorry, they went up, and they failed again to break that level. They went down again. They went up. They went up, and they came back to the zone again. They found difficulty breaking that zone, going back to this zone. So you see that prices have some bit of resistance when it comes to this level. Prices resist breaking through, as you can see here, here, and here. So yeah, these are the other tools that can help you analyze price movement better. And we also have the You also have certain geometric formations. As I said, the head and shoulders. Yes, we have the head and shoulders. Let's say this is the head and shoulders chart. You see, so this will be the head and shoulders. Usually the tool I use, there is a tool here, I use this tool for me to confirm that this is indeed head and shoulders. This is something that I get from Trading View instead of me wasting time and drawing it on my own. So here, this is how I see uh, if I had a head and shoulders. As well, we also have others such as the double top. We also have the double top. Let me show you fast how a double top, this is the bonus one, and how a double top looks. A double top would look like this. As you can see, uh, as you can see here, we also have a head and shoulders. I forgot to see it. You see, let's see, here's a double top. As you can see, here's the neckline. Prices went up. Once they went up, you see double top. So there's a M there, and there was a retest. Prices went down. There is also a head and shoulders here. You can also see it. Let me show you. I didn't see it at first. Let's see. See? Here's another head and shoulders. And we also have what we call pennants. We also have something we call pennants. Let's see. They would they would look like this. So it will look like this normally. Sure. You see, they would look like this. Um, and then we also have the flag. We also have the flag. The flag looks like this. Yeah, flags look like this. See this? This normally signals a continuing movement. Oh, let me drink some water. So yeah, drinking water out of a jug. Today is very hot. So this will be a flag. Yeah. So yeah, I think that's about it for the tool that you could use. Guys, yes, we are done with the tools that helps analyze price movement. And now I need to inform you about this just because I noticed this in my journey as I am growing as a trader. And I've also listened to certain interviews such as FX Traders SA. I listen to those interviews and I tend to hear some of the mistakes that I have written down here, and these mistakes also is something that I've suffered from and learned from. Okay, let me not say suffer, I learned from. Okay, but it took me some time to learning to avoid making them. So now I'm going to tell you about the common mistakes to avoid that will help you stay ahead. So over analyzing small movements. Small random price changes often don't indicate a trend. This is your 1 minute time frame, 15-minute time frame, and so on. You need to focus on larger patterns such as 4 hour time frame and overall. So another mistake that I used to make is ignoring economic news. There are major events that can drastically alter the price movement. So always check an economic calendar before trading. Yo, let me tell you a story. So I was learning technical analysis almost every day, or since 2021. Seriously, to be serious about trading since 2021. So I focus more on technical rather than fundamental. And every time I listen to interviews, this is what I was hearing, that you need to know price movement. You need to know price movement. So I was like, you need to know price movement. That means you need to know technical analysis. That's how I felt. Okay, so I took trades. I didn't know there were news. I didn't know there was something called NFP, which happens every Friday at the first of each month. I didn't know. So I was in profits. I deposited 2,000 and I was in profits. I made $200, and I didn't want to close because according to my technical analysis, the market was still going to go down. And I think I was trading gold. Yes, I was trading gold. So yes, I didn't know. The price went back up because I was selling. The price went back up within few minutes. I blew the account. Luckily, I had some more money to lose. I deposited another 2,000 and I opened aggressively. I opened because I was opening 0.0 lot size. Now I opened 0.10. I opened. Prices went down after NNP, after NFP, and I was able to recover. I made I think I made $500 after that. So minus the money that I lost, 2,000 that I lost. So I made something 400 and something $400 if I'm not mistaken. So yeah, so it's important to know to know about economic news because I was not aware. Since that day, I do not play on FNP, NFPs. I relax and watch the market. So yeah, the last thing is that neglecting risk management. You need to make sure that you always use tools like stop loss orders to limit potential losses and ensure your risk to reward ratio is favorable before entering any trade. So this is another thing that it took me some time to learn about risk management because I would have a 500 account and I would be opening crazy lot size, like it was gambling basically, until I learned that okay, if I have a certain amount, then I need to open smaller like lot sizes, and as the account grows, so do the lot sizes. That, and also leveraging is one of the best thing that you could do for a trading account. Because I think my leverage at the time was 1:500. Yes, as well as your risk to reward. Make sure in any trade you risk one in order to get 2%. Let's say you want to take a trade on gold. Be willing to lose 1% in order to gain 2% So your risk to reward ratio is 1:2. Okay, before entering any trade, you need to know and be aware that this is how much I'm willing to lose in order to gain this amount. So yes, so today we come to the end of the video. So what we talked about, understanding price movement is essential for making informed trading decision using tools like candlestick patterns, support or resistance levels, and chart patterns to identify opportunities that will be fruitful. So you need to avoid common mistakes by practicing risk management and staying updated on market news. There are platforms for fundamentals. I think some brokers provide fundamental news, if I'm not mistaken. And the next step you need to take is to begin applying these principles to your own trading and keep learning by exploring advanced topics and practicing on demo accounts. So yes, with all that said and done, we come to the conclusion of this. I hope this video is fruitful on your journey. I hope it's very fruitful to your journey. I wish you the best for the year 2025. Whatever you do, do not stop. Keep pushing, keep pushing. No matter how much you feel like quitting, push, push, and there will be a reward in the end. So leave a comment if you want to get deeper into something that you heard in the video. If you can also comment if you want me to do certain topics, cover certain topics. I can do that for you. And like, subscribe, and yeah, asenze imali chance, asenze imali ladies, what's stopping us? Yeah, ne.